This trading week is the 17th of April through the 21st. Let's get started. We're kind of kicking off a Q2 earnings season. Pretty busy week ahead, so let's dive into everything. Risk disclaimer: we understand there's risk in trading. Please always use trade capital only. Do not trade with money you cannot afford to lose, whether you're trading stocks, options, futures, forex, cryptos. You know the risks. Social media, make sure it's the real me. If you're getting messages from me, it's probably not me. If you reply to me first or send me a message first, I can reply. I will reply. But if you're just getting some random, like, hey, this is me, I've got some crazy, stupid opportunity, that's not me. So get those scammers kicked off, flag them, report them, block them, all that good stuff. Okay, let's jump to the charts. Took a screenshot of earnings for this week, just some notables. We kicked off with financials last week, and we're carrying those through Wednesday of this week. You can see we have Schwab in the mix. We have, let's see here, Bank of America, Goldman Sachs on Tuesday, Netflix earnings, Johnson & Johnson, Lockheed Martin, Morgan Stanley, again with the financials, Ally Financials, Las Vegas Sands, little casino stock. We'll see how some of those consumer discretionaries are going. IBM, Tesla. Tesla will be a big one on Wednesday. We have basically a credit spread straddle running on Tesla where price needs to get above 190 or below 175, which should not be a problem based on the earnings average. I think the earnings push is like 8.35%. And yeah, so we should be in good shape. We'll just look to manage that one this week. AT&T's had a nice recovery off the lows. Hopefully we'll see some positive earnings on that. Taiwan Semiconductor, Blackstone, Freeport McMoran, that's a big one for copper, Procter & Gamble, Schlumberger's Energy, and SAP Financial. So again, notables, there's a ton of other earnings. I think as a whole, 157 companies this week reporting earnings. Let me go year to date. If I do check my morning brew. Morning brew markets year to date. Nasdaq's up 16.72%, S&P up 8.2, Dow up 2.26. The 10-year Treasury is down 36 basis points to 3.59. We're still in that inverted yield curve. Bitcoin is hanging out there above 30K, up 83% for the year. Interesting, they noted Charles Schwab, since they have morning, this is morning earnings, but Schwab is down 37.85% this year. Wow. That is SH or SCHW. Wow. I feel like they had some exposure to the bank stuff. They had to have. Let's see here. Well, I can take a look and see what the major news is, but I'm sure there's some exposure, whether it was brokers or banks getting hit pretty hard with Silicon Valley and kind of the fallout of that. But anyway, if we come down to 30 bucks, I still like it. Trade we took last week, LTHM, we took some 22 and 22.50 credit spreads. I bought some shares around 21.50. Looking to see if that gets called away for a couple of bucks, and there's some good range potential up to 32. Coinbase, I'll be watching closely this week. We're at 67.85. Looking to see if we can get back to 71 plus, but stay below 77. So I'll be looking to manage those this week. We have a busy week in equities on demand with some of our expirations. If I type in 421, which is this Friday, shows that I have 66. That's spread out between a few accounts, but we do have quite a few. And then inside of our tracker here, I think we have 40 something that's tracked with trades. And we look through a lot of these on Friday. We're probably having to manage, maybe 15 to 20 this week, which is still a pretty busy week. So it'll be a busy management week for us in stocks and options. And then we're going to look for some direction. So not a bunch of volatility today in the currency world, but still dollars on top. Last week, the dollar had a big surge on Friday to kind of recover where it was getting beat up pretty badly all week. And so we'll be watching that. I'm looking to see if we're having a pre-summer push and it's dollar weakness, Friday could have been a profit-taking day. We're going to see if it rolls into dollar weakness again, or if the DXY is holding at equal lows. And this is what we need to really watch. I mean, if we hold equal lows, then DXY is coming back up to likely equal highs. This is still a high to low. We'd have that retracement expected to around 106, maybe a little bit higher, but 106 is a great spot to start looking to short the dollar again. But if it holds this level, right now there's a fairly low risk, high reward setup for dollar strength, and we'll see if that takes flight this week. It is odd timing to see so much dollar weakness through April, and then see last Friday, does it just pivot in the middle of April? I don't think it does unless the market's looking at the Fed rate decision, which is May 3rd. And the percentage actually keeps growing. It was low as 60-40 last week. Now it's up to 84. So it looks like the Fed is going to raise one more time, 25 basis points coming May 3rd. And then we're looking for the end of the year to start influencing some cuts, probably by 50 to 75 basis points. The question I'm looking at for the summer from June to September is, what's the U.S. situation with the debt ceiling? And get it into the fall, are we looking at the Fed finally acknowledging that we're in a recession? If we're in a recession, then they start cutting rates. So it could be an odd recession where we're in one. We're admitting that we're in one. We have a slower economy, but we might see assets go up as rates are getting cut. We might see tech recover because it was beat up so badly as rates get cut. We might see mortgage interest rates come down a little bit. I think we're still in the sixes, but Mortgage News Daily sitting at 6.5. If I go to the traditional 30-year. So not that long ago, we're talking in early March, we had a peak in the Fed funds rate. Well, at least the short-term ones. We saw that inverted yield curve withdraw a little bit. But we were up above 7% again in March. We've been going down pretty steady, but we're staying firm between the 6 and 7% for right now. If the Fed starts cutting rates, it's going to be interesting to see how those fixed income vehicles play out. Do we see mortgage rates drop sub 6? Do we see our 3-month, 1 month, 3 month, 6 month, 1 year CDs? Do they start changing? What's the longer term outlook for some of these fixed income vehicles? All that's subject to change. So we'll be watching that. It's going to be an interesting story for this week. There is a pretty big exit going on from less risky into fixed income, taking advantage of some of the short-term opportunities in T-bills, Treasury bills. But you're essentially locking in 3 to 5% annualized over, the S&P is up 8%, the Qs are up 15, 16%. Granted, that's nowhere near the highs from last year, but we're going to see what the market does. So lots to digest. Let me get logged into YouTube, say hi to everybody. Hope you're doing well. Hope you all had a great weekend. And any other requests, any charts you want to take a look at, let me know. But good morning, Chris. Good morning, David. Good morning, Gary. Good morning, Craig, Jacob, FK, Ruth Ann. Good morning. Jason, good morning. Catherine, good morning. Robert, good morning. What's happening? Nice to see everybody. All right. So busy management week. Dollar basket on the watch list. Was typing that in right here. I did do some testing over the weekend on my Equalizer Pro. I'm going to get that running live this week to see if I can find the file here. I'm going to start running that live on 2 separate accounts. Strategy did pretty well. My buy and sell strategy, where I went a single account with 2 directions, it made a lot of money, but it wasn't as clean as going 2 accounts and going single direction. So here is, let me see if this loads up in a timely fashion. So this is what I tested over the weekend. I ran this from 2015 to present. So I wanted to accommodate some of those wild and crazy conditions we've seen in the last few years. So 8 years, really. Swiss National Bank flash crash, Brexit, post-Brexit, oil crisis, dollar strength, COVID, melt up, tech crash, correction in 2022, a little bit of melt up and great reset going into this year. So anyway, I told traders on Friday when we had Equalizer Pro class what I was looking for this particular deployment. Like I said, timely fashion. Was, it's fine if it makes obviously I expected to make money going both ways, but the drawdown was a little bit bigger, and we can control that by having different account sizes and taking different entry levels. But the drawdown was a little bit bigger, and the overall net profits were reduced. So I still think the cleaner approach is to go 2 directions. I'm just going to let that load. I don't know why it's taking so long. But pretty exciting stuff, and I'm going to get that set up today. Getting everything set up with my sub accounts, and I'll have that running live. And I'll start tracking that. So Fridays when we have our weekly recaps, I'll pull the MyFix book stuff and see how those accounts are doing. And then that would give me 5 full-time full auto deployments running. Perfect Storm Pro, Pockets Pattern Pro, and then I'm going to have 2 accounts for Equalizer Pro. So that'll be 5 full auto systems that are running, and all I'm doing is checking on them through my newsletter. That's through pulverreport.com. If you want to check out the website, you can just subscribe to the newsletter. I do a top weekly pick there, and then I just track progress, and it's just a market commentary through the week. So highlighting what's going on. Okay. Yep. Ruth Ann says that's my preferred technique. Single direction, separate accounts. Good. Yep. And that the whole point was, I wanted to do that single direction so we have a bit of a hedge play, where if we're long in one direction, short in the other direction, let it manage net profits. That way the system has, look, it's going to take losses, right? If you're clearly going in the wrong direction, it's going to take losses. But those losses have a finite level. So there's stop losses, but the winners are allowed to run, and the winners are allowed to run with trailing stop losses, so the winners end up being bigger, which is good. So we should have some videos updated for that class as well, coming later on today. They should be uploaded in the classroom. The strategy guide should have been uploaded last Friday, and we've had 2 great classes thus far, and looking forward to another good week of trading rooms and classes. Okay, pockets, I'm actually running that on everything, Gary. I have the pockets running on 21 currencies. The only ones I didn't include are the JPYs. I have pockets running on 21 pairs. I have Perfect Storm running on 8 pairs, Pockets running on 21, and I'm putting Equalizer Pro on 21 with both directions. 2 accounts, 2 accounts. 1 account is going to be buy only, 1 account sell only. But Pockets, I have two or 21. I just took away the yen basket. Even though the yen did, find balance at the end of the year, it was just a wild and crazy trend where I just didn't want to get in trouble. I've seen the yens do some crazy stuff, and they certainly did last year. Okay, good stuff. Okay, we'll take a look at some charts. Any stocks, any currencies you'd like me to take a look at? Requests are acceptable, and I'll just look at the chat. Otherwise, we'll just take a glance through dollar, oil, gold, silver, crypto. So dollar, like I said, this is a really critical spot. If we pull back to equal highs, that would make sense. So there is a low risk dollar play this week if it works. Otherwise, I would consider a stop reverse because we've still been looking at high, low, shallow pullback, and then possibly a settle in with the seasonal trend going for dollar weakness if we come into the 18127 extension. So again, if you're pretty neutral on positioning right now, a dollar long with a stop loss, and of course that translates into using your dollar basket pairs. So Aussie dollar, Euro dollar, Pound dollar, New Zealand dollar, dollar CAD, Swiss yen. But if it doesn't work, dollar weakness still prevails and we're falling lower. So I would consider a stop reverse if the dollar strength doesn't play out for the next couple of weeks. If you're already positioned, if you've already been positioned for dollar weakness, you should have had some decent profit. So we've talked about levels to protect that, above 110 on the euro dollar, above 124.50 on the pound dollar. New Zealand dollar has been stuck in a range, so we're going to see if we get a breakout above 62, 62.50, and 6,300. Dollar CAD, if we have support or resistance, it's been stuck in the middle. Dollar Swiss has been dropping probably the most out of all of them. We are noticing some divergence on the dollar Swiss, but if you look left, there's still some room for it to fall towards 87. If we look even further back to 2015, there's room to potentially fall into the mid. This is 85 to 85.50, possibly the low 83s. But still a massive 10+ year range on the dollar Swiss that I'm pretty sure will hold. I'm just looking to, and if I hold down here and get position, I will be holding dollar Swiss easily back to this midpoint around 95. And meet longer term, possibly up to 1.01, 1.02, where we had these highs last year. So I'm still long term on dollar Swiss. I'm just going to enjoy some positive swap on that one. Oil still sitting with an island gap. We're trading at 82.64, and a little bit of progress here the last couple of days. So we are above the 200 moving average after OPEC announced cuts by about a million plus barrels a day. There's room to the yearly pivot. I could see a gap getting filled here, but that to me looks like a buy opportunity. We come back and find this gap. This could be demand, and we're going to see if oil continues to stay pretty resilient and positive rolling into summer trading. So we'll see. But gap so far, oil off the lows. And I had this level called. We said $65 to $60, major support, and we were long. So we have some positions running on USO in the stocks and options trading room. A lot of these are in profit. So the 66 by 65s, 67 by 66, even the 70 by 65, all those are in profit, looking pretty solid. Oil, gold, silver. Let's go gold. Gold has pulled back because the dollar's found a little bit of an equal low. Pretty massive support, 2050 to 2075. Silver. Silver got up as high around 2608, possibly a pullback, but I like buying dips, so we still have a decent pivot cluster. Looking at this last swing, this low, this high, we could have a pullback. Previous levels here could offer some support. If we're going to see dollar weakness, maybe dollar weakness will kick back in. Past resistance becomes support on silver and gold. Silver has room to run towards $29 to $30. If it pulls back a long ways, then I still like long on silver. Honestly, it's just I'm looking for structure to continue to buy. I do have shares of SLV, and I'm looking for SLV. If it gets called away, we were just shy of it last week, 23.88. I've got a covered call going out to May at $24, which would be a nice little chunk. Otherwise, we have a bunch of credit spreads running as well. That's gold and silver. Crypto, Bitcoin's hanging up above 30,000. Now it's at 29.4. Now, technically, I talked about this last week. We had this high, we noticed some divergence. Pocket right here, pivot cluster right here. 30K is also significant resistance. So I wouldn't be surprised to see a pullback on Bitcoin. Okay, I mean, it looked like potential free run above 30K. We didn't get it. Even on the daily chart, you can see it's pretty obvious that, wick high. We may pull back into something like this where we have a low, we have a high, we set up a little topping pattern, we rebalance. Maybe it comes back to around 50%. We see if it creates a higher low or levels I talked about this year, 20K, 30K, lows of 20, highs of 30, and it's range bound, right? Could be some range bound trading. So if that's the case, be ready to trade Bitcoin. Be ready to trade some of these cryptos. Ethereum had a nice run last week. It kind of played catch up. We surged through that yearly pivot, also facing some pretty heavy resistance past support here at 2173. We measured symmetry, but again, a pullback is likely. There's a low, there's a low. You connect the lows there. We could be pulling back towards a trend line, projecting a channel up. If we have a chance to buy around 17 to 1500 on Ethereum again, I'd look at that technically for a buy opportunity. Okay, I see yep, Ricky, I got you there for Tesla. Tesla and Aussie dollar for Catherine. Swiss yen for Robert. Okay, let's go Tesla. So Tesla has earnings this week. We're trading at 187. Earnings this week on Tesla, I think it's Wednesday after market, so we have Thursday, Friday to manage it. I've got a 421 straddle on this one. I need price to get above 190 or below 175. We calculated it last week where based on the average movement for an earnings report, we should be looking at price to go up to 198 or down to 168. So that should allow us to take full profit on one of these two trades. The loss of one and win on one is going to be a net 65 cents. Now, if we're managing it Thursday or Friday prior to the end of Friday's close, full expiration, then we might manage part of this profit. So instead of taking the full 65 cents, maybe we can walk away with 40 to 45 cents as of Thursday. It just depends on where price goes. But I would expect a decent push on Tesla with high volatility with 157 companies reporting earnings. Tesla is going to be a bit of a jumper. So that's this week. It's pretty neutral. I mean, I still like Tesla long term. This actually, I'm gonna draw this out. So if we had something like this, if Tesla pokes its head back above 210 to 215, we get back above the 200 EMA. I would say Tesla's looking pretty primed for another run back into some demand level. It's actually supply levels up here around 250, 260. But we'd have to see the Qs go with it. It's a big market cap company. Really, the breakdown of the Qs, it's pretty much Apple and Microsoft right now. And Tesla's part of the market cap makeup as well. But it's also in the S&P. So it's a big one, especially when we get back into the buy zone. Aussie dollar is a little bit on the sloppy side. So, I was looking for something like this. This could just be a lot of these like dollar pairs could be setting up for what is kind of technically a Gartley pattern. So if it's X, A, B, C, D, We have something like that where if the dollar strength continues this week, remember I showed you the DXY. If the DXY has equal lows and it heads back up, then Aussie dollar comes back down. Now, I don't think it's going to take out this low, okay? So I could see the Aussie dollar settling in here, right? And then I look for a buy opportunity coming later. And that would be the same as that DXY coming back to equal highs and then looking for a sell trade. Okay? Give me 1 second. I think Benji wants to say hi to everybody. Come here, bro. Come here. Wait. So maybe a little Gartley action there. We saw that also on the New Zealand dollar, and I'm trying to think what other ones. There's a couple currency pairs that are setting this up. The DXY as well. So anyway, that's my thoughts on Aussie dollar. Like I said, if you're going for a low risk, then you could sell Aussie dollar, stop loss above here. If it makes a fresh low, you're managing a surplus of profit. If that's wrong, if this gets stopped out, I look at a stop reverse and see if this wants to head back up, because this could still be low, high, higher low. Even though this is choppy right now, we could still start getting some legs to the upside. But that was a pretty big reset right at the daily 200 EMA last week. That was all happening on Friday. Swiss yen, euro yen. I like both of these opportunities. This run the last 5, 6, 7 days. I mean, this is now 1, 2, 3, 4, 5, 6, 7, 8 daily candles in a row. We have 2 weekly pivots in a row. If you look left on the Swiss yen, there's lots of resistance up here at 150.50 to 151. I put in a position trade over here. So I started selling 145, which was roughly here around equal lows. Then I spaced out 147.50, then another one up here at 150.50. So I've got levels 1, 2, and 3. My stop loss is in, my whole trade is invalid if we get above 152. But if I'm right on this one with this little surge, we start stalling and then retreating. Resistance holds. We have lows all the way down here. And again, if that's correct where resistance holds, there's a lot of reward for a small risk. As far as the big position goes, that's a 1,500 pip area to the downside for maybe a 300 to 400 pip area of risk. So it's all about trade size there, but I'm looking for opportunities to short. We talked about this in Masterflex as well. We start seeing confirmation to sell. I like those bearish alignments on Swiss yen and euro yen. I'll show you euro yen. It looks pretty similar. Right here. So resistance around this 148 handle. Again, same thing, 5, 6, 7, 8 candles in a row. A couple of weekly pivots. I'm looking for confirmation to sell with some shorter time frame alignments. We saw it over here. I'm looking for it again. So if this resistance holds, there's a long ways to go down with a small risk. Dollar Swiss, yep, we showed that one earlier. Dollar Swiss, go to the higher time frame. So, again, this would be an excellent trade. If somehow this is the low on dollar Swiss and this starts working its way back up here, this could be a beautiful bullish pattern, actually. But there's a long ways to go for that to happen. So, right now, the bulls have to break this high. If they don't, then this is a pullback and pushing lower and pullback, pushing lower, likely going to stay this way until we hit, maybe 87 or 85. I just drew a trend line last week in the workspace. If we don't break that trend line, it's still bearish. So the bulls on the dollar Swiss, even though I'm personally long on the dollar Swiss, I still need to see a lot more confirmation on the right-hand side of the trend line. Until that happens, I'm just going to hold and dollar cost average in at these big spaced out levels, 250 to 500 pips a piece, just spacing in and just building a bigger position, ultimately going back to this yearly pivot and this big pocket zone around 96 to 9,700. Okay? So if you're looking long on dollar Swiss, there's no confirmation. That trend line has to break. The hard part is, to me, it's an attractive enough level that I'm just going to hold it, even though I'm upside down in the overall position for now. Okay, so that covers some currencies. Crypto, if 30K is going to be a rejection point, Bitcoin might see a range from 30 to 20. We will see. If Bitcoin drops this week, we're going to keep an eye on Coinbase, which is now trading at 65. Still a gap to fill, but we really haven't made much progress to the upside. It's been struggling here around 72.50, and then today with a little gap lower, we're pushing slightly lower. So we're going to see if there's some risk appetite. it's going to be something we want to keep a close eye on. If we get a trade back up into the high 60s or 70 plus, I'll be managing that or monitoring that. Otherwise, I'm getting full credit on this one here for if we're below 77. That is by this week. Okay. So it's 9:58. Any final questions? Otherwise, I'll start wrapping up. We'll have a end of week recap on Friday. Busy week this week in the trading rooms with some expirations for equities on demand. Masterflex class, Equalizer Pro. I'm really excited to get the Equalizer Pro up and running live, and I'll start tracking that. I'll fill everybody in on Friday with how the system's going. But pretty excited about it. Just because I just put it through the ringer with all these crazy years of trading, and I mean it works. Obviously back testing is one thing and forward testing is another, but still, I put it through all sorts of crazy market conditions, and it survived pretty well. And when we can control the drawdown and see consistency, then that's a good way to start. Okie dokie. All right, I'll let you go. Happy Monday. Happy trading, lots of profits. Let's have a good week in the trading rooms and classes, and I'll see you then. Thanks. Bye.